Bitcoin and the altcoins continue to perfectly mirror the global liquidity index, telling us that in just 9 to 10 days' time, Bitcoin and the altcoins will continue their move back towards the upside. But will this move be sustainable, or will we see Bitcoin and the alts roll over for yet another low? Well, I'm here to tell you that it's all about the global liquidity index, and by understanding what it is that is driving that indicator, it gives us a clear window, a clear view of exactly what is going to play out over the coming weeks and months. And let me tell you, it's pretty exciting. So if you want to know exactly what is going to happen over the next few days, as well as how to apply this forward-looking indicator so that you know exactly what's coming up in the weeks and months ahead, then hit the like button. Let's get into today's video. Now, in a video I made just 3 days ago, I told you that Bitcoin was following perfectly the global liquidity index. And I'll tell you a little bit more about what the global liquidity index is and what is really driving it right now that has me incredibly bullish as soon as I show you exactly how well these things are matching up. Now, this is Bitcoin on the daily chart. And if you want to add this indicator because you missed it on the video the other day, you simply need to write M2 global and then just go down to the third indicator here. Click on that and it's going to add an indicator to your chart. Now, in order to make it line up with Bitcoin, you need to simply go to the cog and hit the number 70 on the daily chart, or if you're on a weekly chart, 10. 70 days is 10 weeks, of course. Click OK, and you're going to see that this is lining up almost perfectly with the Bitcoin price. Now, after that video I made the other day, people were like, yeah, it's matched up perfectly since the start of 2024. You're right. But before that, there's some sort of movements around that don't always match up. And that's fair. But I've gone back and looked at the times from which this started to match up perfectly. And guess what? It's when the Bitcoin ETFs came in. Something that tied Bitcoin more closely to the global markets than anything did before, because it allowed institutional money, banks, etc., to be able to invest more freely into Bitcoin. And that, I believe, is what is now giving us the perfect correlation between the global M2 and the Bitcoin price. So why is it 70 days behind? What on earth is going on? Well, global liquidity is starting to flood into the market around 70 days before it affects the Bitcoin price. On the flip side of things, when it peaks, it comes down 70 days ahead of Bitcoin. Why is this so useful? Well, it means that we can start to work out where Bitcoin's going to be moving into the future before it's even happened. Why does it happen ahead of time? Well, because when that liquidity arrives in global markets, it takes time to work its way into crypto. It goes into bonds, it goes into real estate, it goes into various other assets before it gets down the risk curve into Bitcoin and the altcoins. So looking into this chart, where is Bitcoin headed in the next few days? Let's have a look. Well, you can see that Bitcoin now matches up with this particular area. Just a couple of days ago, we saw a bounce on the global liquidity index, which took us from this point up to this point. We then had a sideways move and now a red day. Today, I anticipate a red day in the crypto markets since we see a bit of a fall off in the global liquidity index. And that will continue potentially until the 21st of March, which is next Friday. And from that point, you can see that we see it pretty much a bottom here, and then we see it rising back towards the upside once more in a pretty aggressive way. Now, what we can see is the global liquidity index is now topping out against the previous top. That was the top that coincided with the top of the Bitcoin and the altcoin price that we saw back early middle of December. And since then, yes, we saw another spike in Bitcoin, but the total market cap of crypto has been plummeting towards the downside. And that's because the liquidity has been draining out the market as far as this lagging indicator is concerned. So what we need to think about is this liquidity going to push higher or not, and what is really behind driving this particular indicator? Because I know many people are starting to talk about it being the US Federal Reserve, and yes, the Fed definitely has a big impact on this, but really it's what's happening in the dollar right now around the world that we need to pay attention to. Now, if you think this is BS and it's not going to work, I urge you to go and look at this indicator, put it on your charts for yourself, and don't just fly out there and say, yeah, this is BS, it's not going to work because the interest rates aren't coming down or whatever. Well, you know what? You don't need the interest rates to come down because of something else. Now, I know many people will say Bitcoin is just bouncing right now because it's just breaking off of this previous area of resistance. It's retesting this. It's ready to head back towards the upside. That's pretty valid. But I think there is another indicator that is better, that is going to tell us why Bitcoin not only will start to get up to here again, but will increase and push higher. Because right now, the global liquidity index tells us that we have enough to be able to get back to here but not necessarily higher. And obviously that could then be the fear that many people will be talking about. So if we're pretty sure that on the 19th of March, the US Federal Reserve isn't going to move interest rates, and why would it? Because yesterday, despite the fact inflation was a little bit lower, it still tells us that rates are not due to come down, since Jerome Powell, the chair of the Federal Reserve, said that it won't come down until inflation's at pretty much zero. Then we need to work out what's driving global M2 or global liquidity. And I found it. If you go to the DXY, which is the dollar index, and you use the global M2 liquidity chart indicator against the DXY and take off that 70-day delay to make it zero, then guess what? This completely inversely correlates right now to the DXY. You see the DXY goes down, the index goes up. You see the index comes down, it's because the DXY is going up. And guess what? The DXY is falling right now, which is forcing this indicator higher. Right now, we're looking at why the global liquidity index is moving up and down on a daily basis. It is literally doing the inverse of whatever the dollar is doing. And there's very good reason for that. The dollar is the global reserve currency. Everything is based on what happens with the dollar. Basically borrowing the dollar, basically selling the dollar, etc., depending on market conditions. When market conditions aren't so great and interest rates are really high, it makes sense to put your money in dollars and ride out that wave. But other countries around the world are making moves right now which are taking away from the dollar's strength. First of all, we are aware that Donald Trump wants to weaken the dollar. He wants to weaken the dollar because he thinks it's better for trade, which it is, because it means the products coming out of the US are cheaper for other countries to buy. But not only that, other things have been going on behind the scenes that have been weakening the dollar by making other assets out there more attractive. So what might those be? And I appreciate this is kind of pretty boring and pretty economics based, okay? I'm trying to do my best to sort of simplify it and make it as kind of easygoing as possible. But just bear with me because it's so important. And if you can understand this, then you're going to have an indicator pretty much telling you exactly what is going to be happening in the markets ahead of time so that you can sell somewhere near the top of this bull market and as well be able to take profits along the way before next major corrections come in. And we've obviously seen a major correction recently, probably bigger than we would have liked, but that's all because of what's been going on in this indicator. So if we know that everything is about the dollar right now, what is weakening the dollar? Well, the euro is going up significantly, the euro US dollar. And why is the euro going up significantly? Well, because Ukraine has gone and requested a ceasefire from Russia. That's because Donald Trump basically said that the US is no longer going to fund the Ukraine war. Ukraine basically can't continue this war against the Russians at this current time. Without war in Europe, it makes for better financial conditions, understandably, because it's going to lower the cost of things like gas. It's going to lower the uncertainty in terms of like war with Russia, etc. Not only that, but Germany has also been heavily investing in its military and various other factors which have been stimulating economic growth for the euro. So the euro is now becoming stronger against the USD. Thus, if you want to buy one asset over the other, it weakens the asset people are selling to buy the other. And if you look at this Euro USD chart, which has been in free fall since the 2008 financial crisis, you will understand that it looks like it could well be starting to break out, putting in a higher low, and then ready to break this downtrend, which would send the DXY tumbling. Not only that, you've got the US dollar versus the Japanese yen. Bearing in mind the US dollar is the first of these two pairs, which is why we want this chart to go down rather than the euro, which is the first, against the USD second. We want this to go up to indicate that the dollar is going to weaken. And this is bouncing out of a key area of resistance on this chart, which we haven't seen since 1990. If this continues to fall, based on the fact that Japan is starting to increase its interest rates, making everyone panic who've been borrowing Japanese yen to buy the US dollar, then you can see another reason why the DXY and dollar will be coming down. Not only that, if you look at the Great British Pound versus the US dollar, again, it's breaking out of this trend line, which has been in since 2007. The dollar could be weakening against the pound. We know Donald Trump wants to weaken the dollar. How do we know that? He's said it multiple times. And this was what happened to the dollar last time Donald Trump was in office. So if we have another move like this, we get another bull market like we got back in 2017. And right now you can see that since the 6th of January, the dollar has been in free fall. So why haven't Bitcoin and the altcoins been going up yet? That's right, because there's a 70-day delay. this was incredibly bullish for crypto because it takes 70 days for that to start appearing in the global liquidity index, which is what is driving the Bitcoin market. Now, this is what I think we're going to see for the dollar right now over the next kind of week or so, based off of the global liquidity index, based off of what we're seeing in the Bitcoin price, etc. And that is probably that the dollar will stall in and around this area. Now, in order to understand whether or not Bitcoin can continue higher than where it is or where it has been in December, we need to see the dollar breaking below this support. If the dollar breaks this support, then the bull market is going to go absolutely bananas because this is going to continue the global liquidity index much higher than that recent bounce. Okay, this would then send the dollar index down, spiraling to this level, but we could in the short term see a little bit of a bounce like this, which could be because of various news events or whatever coming out about tariffs or whatever it might be in the medium term. Whatever happens during the next 10 days, your job is to not react, just be incredibly calm. The only reaction I'm allowed to take in the next 10 days is if some sort of like crazy event happens or some piece of news that dips the price lower, then I'm going to buy, because I know that I've only got 10 more days pretty much to accumulate Bitcoin and the altcoins. And if you're thinking to yourself, well, we can't possibly have a bull market because we've got recession coming and we can't possibly do this because the news has been terrible recently, well, just ask ChatGPT what it thinks about what is really going on in the markets right now. It says this: market makers and institutional traders have access to sophisticated liquidity models that track global liquidity inflows. Since Bitcoin historically follows liquidity with a 70-day lag, these players can position themselves ahead of the move, which is why we've been seeing a lot of big money purchasing crypto while little Timmy and the lads have been panic selling. Once enough liquidity enters the system, they will start to push the price up. But remember, it takes 70 days for that liquidity to enter the system. This will trigger FOMO from retail investors. And if you're like, yeah, retail don't want to be in this anymore, as soon as Bitcoin's back at 100K, I guarantee that every retailer will be out there, and you and me and everyone else will be out there panic buying like we've never done before. What else happens during these periods of time? Media manipulation and sentiment engineering. Media narratives shift at key points in the market cycle to reinforce or counteract price movements. Does that sound familiar? We've been seeing various different pieces of news come out recently that seem really bullish, and yet the price just seems to be moving down. Market makers are just continuing to cause panic in order to stop you from entering into the markets. When liquidity is expanding but the price hasn't moved yet, negative news is pushed to keep retail investors out while smart money accumulates. Once smart money is positioned, sentiment shifts and the media begins promoting bullish narratives, driving retail interest just as institutions start to take profits. Now, what we're likely to see is the market makers, we know, who can control the markets, whether it's up or down, starting to get ready to move the crypto markets aggressively. They will do this probably sometime around the 21st to the 30th of March. At that sort of time, we're going to suddenly see bullish news events coming out that are going to drive the markets higher once more. And Bitcoin is incredibly easy to do this with because it's small. Compared to the US stock market and others, it's incredibly small. Okay, unlike traditional markets, Bitcoin has low liquidity, allowing large players, whales, institutional market makers, to move more easily. They use OTC accumulation and slow derivative positioning before big moves. Secretly, they're buying Bitcoin under the radar so that you don't know. Once the broader market starts chasing liquidity-driven moves, market makers profit from the volatility and liquidate all the late entrants. So all the people who've been disappearing from the market, who were in the market in December after getting liquidated, will be back just to get liquidated once more later on. So all you've got to do is the opposite from what little Timmy and everyone else is doing right now. Little Timmy and everyone else right now is absolutely bricking it because the markets seem really scary and worrying, and suddenly they've become economics experts and they're reading the news and Bloomberg's been telling them why it can't possibly go higher. Look at the liquidity. That's all they're doing. They're using the news and the media and the market makers to make you make the wrong choice. The right choice is to just understand that they are following a model, and I've just shown you what that model is. So if you enjoyed finding out what that model is, you want to continue to understand more about what is happening in these crypto markets as the time moves on, and start to understand for yourself exactly what's going on here so that you can take a bit more ownership in what happens, because that's really the way to make money, then make sure you subscribe to the House of Crypto, notification bell turned on. In the next 10 days or so, I will start to look as well at making a video based around like coins and things I think will be moving next, because it won't be every coin at once. Okay, I think that certain coins will be moving in the coming days and weeks, rather than every coin and every narrative at once. I'll explain why that is in that video, so make sure you're subscribed if you want to find out which coins I think are going to see the biggest upside in the next phase that's going to come, because this next phase is going to be so much bigger than anything you have seen before. Now, if you're looking to buy crypto right now, which in my opinion, of course not financial advice, is literally the best time you could possibly buy crypto, then make sure you go to the link down below for Bitunix and WEEX. Both of these exchanges do not require KYC, which means that you can register for them without having to give too many personal details, which could be useful depending on where you live in the world. Not only that, but they also have a huge array of different altcoins available, most of which you will not find available on Binance, Coinbase, or any other major exchanges. Also, if you sign up through those exclusive links down below, you'll also qualify for some huge trading bonuses, so make sure you do that straight after this video. Thanks for watching. Make sure you smash that like button. Things are going to get better soon, guys. Just stick with it. You've been through the worst of it. Subscribe, and I'll see you in the next one. Bye-bye.